Hello everyone, hi, welcome to the channel of Wall Street Mojo. Friends, today we are going to learn a concept that is on MD&A, that is Management Discussion and Analysis. Over here we are going to discuss a few of the examples also, so let's get into the nitty-gritty of the same. The first and the foremost thing, as you can see over here, is Colgate-Palmolive Company's table of contents. There are many other things like business, risk factors and so on and so forth, but we have to look at the item number 7, which shows us as management discussion and analysis of financial conditions and result of the operations. So the very first and the foremost stage, what is MD&A? See, the annual report of any company, any listed company or as listed by Colgate, contains a separate section by the name as known as MD&A, that is management discussion and analysis. See, the MD&A section includes various topics that includes like macroeconomics, you have macroeconomic performance of the industry, the company's vision, then you have your strategy and some key financial indication and so on and so forth. So as an investor, that is very insightful information provided by the company to the correlate of macroeconomic parameter and the performance of the company and so on and so forth of the company in light of them. So the section containing the MD&A is included in the company's annual report. And you can say, in addition to a similar section analyzing the company's financial performance and decoding of the financial ratios and various indicators for the investors. So management discussion and analysis is one of the most useful sections for the financial analysis. So let's get into the detail. The first and the foremost thing, what is the difference between MD&A and the audited financials? So as per SEC, an independent accounting firm should perform an annual audit of the company's financial statement and provide an opinion on the material misrepresentation. However, auditors are not required to audit the management discussion and analysis. It is not to be done. But yes, this is to be done, the audited financial. So they are not required to audit the management discussion and analysis section. MD&A section is basically an SEC filing and are the opinion of the management about the company's financial and business health and provides detail of its future operations. So what detail must you look in MD&A? As simple as that. See, the corporate world have adopted the MD&A, and basically you can say that, the route to demonstrate their commitment to the company's vision and strategy. So how the management has created the value and delivered performance in light of their long-term goals. So when the term management is referred throughout this topic, it will be involving complete structure. There'll be a complete structure in case of the organization, including the board of directors. You have CEOs and all the chiefs involved in the same, and the reporting officers. They're basically reporting officers, controllers, and so on and so forth. The human resource department, finance, marketing, production, operation, and remaining middle and lower management level. So hence MD&A does not only dissects financial figures and results, but also looks into the human resource and operations, the side of the business, which the fundamental and the key factors to any business organization is. The first and the foremost thing is MD1, that is the execution overview and outlook. See, executive overview, that is the next one. That is what we are we are going to discuss is executive and overview and outlook. Okay, so executive overview outlook section focuses on details of the business, number of segments it has, the geographies and they operate. It also provides detail on the focus areas of management and how they look forward to achieving the business and financial objectives. Now this is your executive overview and outlook, how this has been written. Operationally, the company is organized along with the geographical lines and management teams. They have approximately 75% of the company's net sales are generated from the market outside India. So geographic has been discussed. 50% of the company's net you can say sales coming from the emerging markets from these areas, and the geographical diversity and balance helps to reduce companies' exposure to business and other risk in any country or the part of the world. So this is your executive overview and outlook. See, Colgate uses variety of the indicators to measure the business health, and this include the market shares, net sales, organic growth, profit margins, GAAP and non-GAAP income, cash flows, and return on capital. So Colgate also notes that it expects global you can say macroeconomics and market condition to remain highly challenging in category growth rates continuing to be very slow. The second thing that we are going to discuss over here, the discussion on the results. So you can say discussion on results of operations. Now, in this section, the company discusses the key highlights of the current financial or the current fiscal period financial performance. In this, basically, management provides details of net sales, gross margins, selling and general admin cost, income taxes, and so on and so forth. Also, basically, it provides the detail of any dividend declared and its payment, that is the payment details as follow. We can see from the following table. See, as you can see over here, this is the details regarding the result of the operations. Net sales was this. It was down by 5%. Then the net selling price increased by 2.5. And all of the details regarding, the volume has increased by 1.5%, and so on and so forth. So the Colgate's net sales is down over here by 5% in 2016 as compared to 2015 due to the volume decline of 3%, close enough to 3%, and negative foreign exchange impact of close enough to 4.5%. The Colgate's notes to the organic sales of oral, personal, and home care, a product segment increased by around $4 basically in 2016. Let's see some of the discussion on the segment results. See, the company also provides you the detail on the individual segment, its contribution to the overall sales growth rates and the performance measure. Let's see that. You can see the segment details over here. The company markets its product over here. The Colgate operates in close enough to 200 countries with primarily two segments, that is the oral and the personal and home care and the pet nutrition segment. So this is how the details has been divided of oral, personal, and the home care situation in North America. The fourth thing that we are going to see over here, let me write over here, the third was what we saw is the segment, that is discussion on the segment results. So I'll just write over here segments. Now the next is the discussion that we are going to do on non-GAAP financial measure. I'll just write over here non-GAAP financial measures. See, generally what happens is that the company uses non-GAAP measures for the internal and budgeting segment evaluation and understanding overall performances. So therefore the management shares the information with the shareholders so that they can get a better insight into the financial performance of the company. As you can see over here, this table provides a quantitative reconciliation of net sales growth to the organic sales growth for each of the year of 2016 and 15. There are details of oral, personal, home care data over here and the organic sales growth. So the above table provides a reconciliation of net sales growth of GAAP to the non-GAAP measure of the Colgate's. The next that we are going to discuss is the liquidity and the capital. I'll just write for you liquidity and capital resources. So now this section provides you the detail of the cash flow, debt issuances that will help you to meet the business operating and recurring cash needs. So you can see the liquidity and the capital resources and the cash flow details over here. Over here we can see that the Colgate generated close enough to 3141 in 2016, and its cash flow, that was the cash flow from the operations, and its cash flow from the investing activity was close enough to $499, and then after additionally the cash flow from the financing activity was an outgo of 2233 in 2016. So additionally the long-term debt, including the current portion of the debt, decreased to close enough to 6520 in 2016. The next thing of management discussion and analysis, the sixth point, that is the off-balance sheet arrangement. Now in this scenario, this section provides you the details of any balance sheet financial arrangement if the company has entered into, the company does not have any off-balance sheet. If it is, usually it is written that, the company does not have any off-balance sheet financing or unsolicited special purpose entities. So Colgate does not have basically any off-balance sheet financing arrangement. The seventh point of management discussion analysis in this section is managing your foreign currency. So that is your next item is foreign currency, interest rate, commodity pricing, and credit risk exposure. So in this section, the company discloses how it manages its currency risk, interest rate risks, and the price fluctuation. So managing the foreign currency, let's see basically how the details go about. As you can see over here, this is how the details has been disclosed for managing foreign currency, interest rate, commodity pricing, and credit risk exposure. Now, the Colgate manages its foreign currency exposure through cost containment measures, sourcing strategies, setting price increases, and the hedging of certain costs to minimize the impact of the earning of the foreign currency rate movements. Second, the company manages over here its mix of fixed and floating rate of debt against its target with the debt issuance and by entering into interest rate swaps in order to mitigate the fluctuation in the earning of the cash flow, and you can say that may result from the interest rate volatility. The third is futures contract are used on a limited basis to manage the volatility related to anticipated raw material inventory purchase of the commodity. Now the eighth is basically the critical accounting policies. So I'll just write accounting policies over here. In case of the accounting policies, in this section, the company management discussion and critical accounting policies that have meaningful impact on the financial representation of the company's health. Now this is how the things go about for the same. The shipping and handling costs may be reported either a component of the cost sales. Over here, the company accounts for inventory using the FIFO method, and 75% of the inventory, and LIFO for 25% as res. So we note from the above that Colgate uses both FIFO and LIFO method for the inventory valuation. And from the above mentioned details, a fair idea can be taken as to what kind of information disclosures today's corporate world is required to make an accountable to the investors community and society at large, as well as the transparency in the reporting. Since the management is well positioned than the stakeholders who are the outsider to provide information regarding the performance of the company based on such management's analysis, only certain present actions taken by the company can be justified and a walk towards the committed goal can be demonstrated by the management. Now the next and the fourth thing is, how does the MD&A help? See, MD&A helps in understanding the operations basically. I'll go to the next sheet. So MD&A helps in understanding the operations and financial results in a better light. See, MD&A has a certain definite objective which can be as follow, the first one is it enables the readers of the financial statement to understand it in better ways of numbers, financial conditions, and to get into management's shoes to understand certain strategic and operational decisions which are bold and largely impacting the future performance and position of the company. So basically you can say the understanding portion is really a great sense over here. Understanding. The second is additional, supplementary, and complementary information provided in MD&A will help the readers understand what exactly the financial statement that will depict and what is not reflected. The third is, you can say that the addressing the investor perception towards the risk associated with the business operations and outlining the past trends to indicate the management efforts towards mitigating those risks and leading the path towards the future financial statement. Now, what is the format and the extent of the information that MD&A should reveal? So for the same, there are really details that we should evaluate. The first and the foremost thing over here is that you can note from the mentioned objectives that we have discussed over here and the governing regulations in India, there is a prescribed and constantly followed practice of how the information is presented in the annual report. However, neither is there any comprehensive reporting format prescribed by the government in this regard, and nor can we notice any universal practice that has been there for the same. So the accounting professionals and the governing institution acting in respect of the countries might provide guidance for the presentation of MD&A, like for example the FASB, that is the Financial Accounting Standard Authority Advisory Board, FASAB, in the United States has issued a recommended accounting standards on the management discussion and analysis, with the first draft by published in the January 1997, which can be accessed using the FASAB standard on MD&A in India. So in India, basically, there is no standard or guidance note in this behalf. However, there is a company called ICSI, that is Institute of the Institute of the Company Secretaries of India, has issued a reference note on the board's report under the Companies Act 2013 series, but leaving MD&A presentation to the interpretation of the industry. So taking a note from the another prominent institution guideline on management discussion and analysis, the Canadian Performance Reporting Board has laid down certain principles based on MD&A and should be prepared. Those principles are the first one is through the eyes of the management. I'll just write over here, through the eyes of management. Now, in this case, what happens is that, the company should disclose information in the MD&A that enables the readers to view it through the eyes of the management. Second is integration with the financial statement. MD&A should be complemented as well as the supplement of the financial statement, you can say. The third is completeness and you can say materiality and materiality case. Materiality. See, in this case, the MD&A should be balanced, complete, and fair as well as the provide information that is material to the decision-making needs of the users. FASB has described the requirement in other words, saying that MD&A should deal with the vital few methods. There are some of the strategic perspective also, like, the MD&A should explain management strategy for achieving the short-term and long-term objective. The fifth one is the usefulness. To be useful, MD&A should understand the relevant comparative or comparable, verifiable and timely. So conclusion, in conclusion, in the light of the increased participation of the retail as well as the foreign investors in the capital market in the recent years, a more comprehensive and transparent mechanism of information dissemination is always required. So this is because MD&A basically, you can say, must provide insightful and sufficient information to the stakeholders community to analyze companies based on the performance and help better mobilization of capital. This is more required in India, especially after the economic survey of Close Enough to in 2017, which depicts that India has beckoning sweet spot in the darkness of the world economy. MD&A is being one of the very efficient way to provide meaningful and a highly useful information to the investors, and improvement in MD&A and in presentation format will lead to a good corporate governance, that is your CG, and practices and a healthy relationship between the companies and the investors community.